Good afternoon and welcome to NYFP. In midday trade, the major U.S. stock averages are back in positive territory with the Dow Jones Industrial Average above 13,200. Joining me now is Todd Schoenberger of Blancolt Trading. Good afternoon, Todd. Thank you so much for joining me.
Thanks for having me, Remy.
Well, we did get a slew of U.S. economic data releases out this morning, and we started trading nearly unchanged to flat. But now we're back up above 13,200 for the Dow, and we are approaching a key level again for the S&P 500. But what do you make of the latest fundamentals?
Well, I got to tell you, I'm not buying any of this right now. I mean, first of all, you had a market last week that did trend lower leading into the jobs report, as I think all traders were expecting. This week, we had the big pop on Tuesday. Then we had the Fed comments, obviously, that really helped that, and with the bank stress test coming out early, that obviously helped issues. I think going forward, though, I think traders right now are really concentrating on the debt bombs that are taking place in Europe. We still have an economy here in the U.S. It still remains a little fragile, and you have a slowdown in China. So when you incorporate all these other issues that are there, the headlines, we are still going to remain skeptical, at least for the short term.
And Todd, I'm glad that you brought up China, because we did get the GDP growth lowered last week, and then we got the wider than expected trade deficit. Right. Do you expect to see a monetary policy change out from China anytime soon?
I would think so. Well, I don't think so. I mean, listen, they're forecasting 7.5% GDP right now. If you look at Shanghai alone, they're still at double digits. I mean, it's huge for that country. I think the issue for them, though, is still growth. It's clearly going to be their export market, what they're taking, as far as what they can export. The issue there, their number one customer right now is Europe, is the European region. So if that's slowing down, that will impact China, and that's going to clearly impact the world. I think the biggest clue of this came out last week, Remy, when McDonald's came out and actually said that their European revenues were down substantially. 40% of that bottom line comes from Europe. So if they are taking a hit, McDonald's, that's going to actually impact China, because obviously Europe is slowing down remarkably.
And Europe has been on the back burner after the Greek debt deal did go through, but we do have to keep an eye on the other pig nations. Right. So how are you grasping the concerns regarding the sovereign debt crisis?
Listen, the Greece issue, though, isn't so much about saving Greece as it is as much as that deal, because, like you said, the other countries in the pigs category, I mean, look at Italy alone. I mean, it's a G7 country. If you have Greece that's going to be able to get such favorable terms, wiping out 70 cents on the dollar, for example, on their Greek debt, Italy's going to want the same thing. It's a chess match. So whatever deal that happens there, that's what everybody else is going to ask for. And going forward, though, you could really see it. The European debt bombs, this is going to last for years right now. This is not a week-by-week issue. The fact that the market has such knee-jerk reactions whenever news comes out like that, or out of Greece, it seems somewhat positive, is really short-term. It's not a good way to think, especially with trading. You really need to look out way past 2012, probably going into 2015. We're going to be dealing with this for some time.
Okay, Todd, last but not least, before we wrap it up, trading volume has been light in the equities market. So what is it going to take to see more conviction in terms of volume?
Listen, you have 401k balances. The average 401k is $104,000 in this country. That was the start of the year. You have the stock market that's at 5 to 8%, depending on which indice you're looking at. So let's just say you have an improved wealth effect. That does improve equity investing, that you will see some flows coming in. However, we're not seeing the flows, I think, from a lot of these mutual fund companies that all of us were expecting this year. That will help volumes. The other side of it is that here we are on the floor of the New York Stock Exchange. There's got to be a better impact as far as selling what we do here to Main Street. Get people involved. Remember, 60% of all Americans are somehow invested in this stock market, whether it's direct, 401ks, whatever it is, trust accounts, whatever it is. 60%, 6 out of every 10. That's up from 40% back in 1980. So people are involved in the markets, but you want to get more people involved. You want to get them active. We just have to educate better.
Okay, Todd, well, thank you so much for weighing in on all these fundamentals, and have a great day. Thank you.
All right. Thank you, Remy.